Have you ever wondered why two people earning the same salary can live completely different financial lives? They start in the same place, but decades later, one wakes up financially free, while the other still worries about the next check. Most assume the difference is intelligence, luck, or timing. But Warren Buffett spent 70 years proving the truth is simpler, almost invisible. Wealth isn't built by knowing more. It's built by behaving differently. And the behavior that matters most has nothing to do with predicting stocks or chasing trends. It's about mastering something far rarer: the ability to stay rational when everyone else loses their grip. Buffett calls it emotional control, but that phrase only hints at what it means. It's patience shaped into discipline, clarity under pressure, calm in chaos. It's the invisible skill that turns average intelligence into extraordinary compounding. History keeps demonstrating this truth. Markets rise, collapse, recover, and repeat. The names change: .com, real estate, crypto, AI. But human nature hardly moves an inch. Prices climb, friends brag, experts predict a new era, and greed quietly replaces logic. Then fear takes over, and the same crowd rushes for the exits. Buffett learned early that the most dangerous part of investing isn't volatility, it's emotion. The real battlefield isn't Wall Street, it's the human mind. He first glimpsed this reality long before the world called him the Oracle of Omaha. As a teenager, he delivered newspapers before sunrise, counted his earnings at night, and kept meticulous notes on every penny. He wasn't chasing excitement, he was studying behavior. Why did some people save while others always needed more? Why did certain businesses thrive decade after decade? That curiosity led him to a small, dying textile company named Berkshire Hathaway. Most investors saw a graveyard of obsolete machines. Buffett saw opportunity cloaked in disappointment. He bought it cheaply, thinking he could revive it. Instead, the company continued to fade. But buried inside that mistake lay a lesson that changed financial history. He realized that a business itself could decline, but the cash it generated could be redirected into better places. Companies with stronger futures, durable advantages, and management he could trust. Berkshire became not a textile manufacturer, but a platform for intelligent reinvestment. Buffett stopped thinking like a speculator and started thinking like an allocator. Each dollar became an employee. His job was to assign it to its most productive work. That mindset turned Berkshire from a dying mill into a global fortress of compounding. And it wasn't luck. It was controlled behavior, avoiding the emotional need to chase losses or rescue pride. The pattern repeated through his life. In the early 1960s, a nationwide scandal shook confidence in one of America's most trusted brands, American Express. A commodities trader had faked massive tanks of soybean oil, leaving the company responsible for losses it hadn't caused. Panic spread. Newspapers predicted collapse. Investors fled. Buffett didn't. Instead of staring at charts, he went to restaurants and watched. Customers still paid with their Amex cards. Merchants still accepted them. The panic was emotional. The business reality was intact. He bought heavily while others sold, and years later, that boring decision became one of the investments that defined his career. He had proven in the real world what he'd always suspected. Price is emotion. Value is reality. Those two lines move together most of the time, but it's in the rare moments they drift apart that patience is paid the most. Patience, however, isn't passive. It's built on understanding. Buffett doesn't wait blindly. He waits for what he understands. That's why he built the habit he calls the circle of competence. Instead of trying to know everything, he defines exactly what he truly understands and refuses to stray beyond it. It sounds almost too simple, but it saves fortunes. Because most financial catastrophes don't begin with ignorance. They begin with certainty. People mistake luck for mastery. A few wins convince them they can't lose, and that's when they forget to ask dangerous questions. Buffett never stopped asking. He'd rather miss an opportunity than misjudge his own competence. For decades, that humility has been his edge. While others chased new miracles, electronics, biotech, crypto, he stayed focused on businesses he could explain in a paragraph. Simplicity wasn't ignorance. It was self-defense. Charlie Munger sharpened that discipline. He challenged Buffett to stop hunting only for cheap prices and start buying great companies at fair prices. That subtle shift turned good returns into legendary ones. It led directly to one of the most symbolic investments in modern finance, Coca-Cola. When he started buying in the late 1980s, technology was captivating everyone. Wall Street wanted the future. Buffett quietly invested in something timeless, the habit of drinking beverages people loved and trusted. Coca-Cola wasn't about sugar water. It was about emotional constancy, about billions of tiny daily decisions made by consumers who didn't want change. Habits, Buffett realized, are economic moats as wide as rivers. He has always looked for those moats: brands, trust, logistics, scale, any barrier that keeps competitors out. Because a great business with a wide moat lets you compound naturally. It works while you sleep. Buffett cared less about short-term earnings than about the strength of that invisible fortress. When you own such a business, temporary fear becomes opportunity. And no moment proved that more clearly than the financial crisis of 2008. Banks were collapsing, headlines were catastrophic, and even veteran investors panicked. While others asked, "How far will it fall?" Buffett quietly asked, "Which companies will still be standing when this storm ends?" He found his answers in names still making money through chaos: Goldman Sachs, General Electric, and others. He invested billions while confidence evaporated. At the time, critics called it reckless. In hindsight, it was classic Buffett. Do the opposite of panic. Be fearful when others are greedy, and greedy when others are fearful wasn't a slogan. It was survival. Fear feels different when prices collapse. It turns logic into dust. But Buffett treats those moments like emergencies with a plan already written. Own quality, stay liquid, think decades, act inside your circle of competence. He never trusted forecasts. He trusted behavior. Because the future can't be predicted, but your response can be prepared. That preparation shapes how he spends, saves, and thinks about money itself. Every dollar has two futures: consumption or ownership. Spend it and end its story, or invest it and let it start working for you. Buffett trains himself to see the invisible cost of every impulse, the freedom that money could have created if left to compound. Each avoided extravagance extended the quiet engine of wealth. Obedience, not brilliance, made compounding unstoppable. Remove the interruptions: fear, envy, boredom, and the results take care of themselves. His habits, reading before reacting, patience before pride, consistency before drama, built financial serenity. Because wealth isn't a lightning strike, it's a temperature maintained for years. In the end, Buffett's greatest lesson isn't a formula, it's restraint.
Two people can start with the same income and diverge completely. The difference isn't intelligence, it's relationship with time and emotion. One interrupts compounding whenever fear whispers. The other stays. Decades later, that quiet difference becomes a lifetime of freedom. So remember, you don't need to outsmart anyone. You just need to outweight them. Markets will change, headlines will flare, emotions will surge. Patience will keep compounding quietly, invisibly, until it becomes what everyone else calls success. If you found value in this story, subscribe for more lessons from minds that built lasting wealth. Because the best investment you can make is still the one Buffett made first: mastering yourself.